This is going to be something completely different. I love copper, and I love listening to Anthony talk about the copper market. But what you've got with this company is something that very, very few other companies here at VRIC have. We are not looking for money. We are a producer, and we're 51 years old and have been paying a dividend for about 4 decades. But we're probably the biggest company that you've never heard of. So over the next 9 minutes or so, I'm going to tell you about our 2 mines, our rich history of operating in Latin America. We've got strong financial performance, which has led over the last 2 years to very, very strong shareholder performance. We've got a lengthy record of returning capital to shareholders. We have growth opportunities, both organic and inorganic. We've got an experienced, disciplined management team, and we have social license to operate, and I'm hoping to demonstrate that over the next couple of minutes. So I talked about the dividend record. We've been paying a dividend for about 4 decades. So this is a company that was created in 1974, listed on the Colombian Stock Exchange, or the Bolsa, for about 45 years, and listed on Toronto 4 years ago, largely because Colombian shareholders seem to be only focused on dividend payouts, and accordingly, we were trading at about 1 times trailing EBITDA at the time we came to the Toronto market. So we produce around 220,000 ounces, and our peers in the marketplace are trading at a quantum higher than that. And we're starting to close the gap, but we're still undervalued, and I'll kind of demonstrate that over the next several minutes. We have 295 million shares outstanding. At our close on January 21st, that brought us to a market cap of $2.1 billion. When I joined the company, our market cap was $180 million. So over the last kind of 2 years, we're up about 900%. We charted ourselves against the gold price from January 2nd, 2024 to December 31st, 2025. You can see that gold's up about double. You can see the JDXJ, of which we are not yet a member, is up about 186%, and we're up 903%. This is our first 9 months. So we will report our financial results for the year ended December 31st on 2025 on February 18th, and we'll have a conference call the next morning. But for the first 9 months, we had about $540 million in revenues. Our adjusted EBITDA for the trailing 9 months was $243 million. That translated into 45 cents a share on earnings, $106 million in net free cash flow. So if you start to look at the company really closely, understand that our net free cash flow is always backloaded. We pay our cash taxes to the Nicaraguan government and the Colombian government in the first half of the year. And in September, we had $102 million in the bank. So unlike the developers or other exploration companies around here, we're not looking for your money. We're looking for your interest in our stock. We have 2 producing assets, one in Colombia, the smallest and the oldest. So we've owned it since 1974. And our second asset is in Nicaragua. Collectively, they have 2.1 million ounces of gold in the proven and probable category. In addition, we have 3.6 million ounces in the measured and indicated category in those 2 operating mines and in 2 growth projects. In 2025, we produced 221,656 ounces of gold. Again, we're reporting our financial results. We expect that we'll produce those between $1,890 and $1,990 all-in sustaining costs, which looks a little bit high, but I'm going to unpack that we've got 2 very, very different operations here. So, Nechí Alluvial. We are in Colombia, about 190 kilometers north of Medellin. We've got about a 12-year mine life currently identified with 1.36 million ounces in the proven and probable category and an additional million ounces in the measured and indicated category. In 2025, we produced just under 90,000 ounces, and we did so, these are first 9 months, cost would have been $1,472, so below the low end of our range. Colombian peso's been running hot against the US dollar. All of our financial results are in US dollars, but except for the Canadian dollar trading, when I talk about a $2 billion market cap, that's Canadian dollars, so about 1.5 billion US. The alluvial operation, so this is an ancient paleo channel deposit, so gold has just washed out of the Andes over millennia. It's sitting above the bedrock in about a 20-meter deep flat-lying area. Then above that is another 10 to 12 meters of just gravel, sands, the like. So we'll create a closed pond with about a 50-meter wide berm. And then we go into this closed pond and we work with our 5 big bucket dredges and 9 to 13 Brazilian suction dredges. So we'll take off that first 10 meters of overburden, set that aside, mine the next 10 to 30 meters down to bedrock. And on board our big bucket dredges, we just got water and gravity separation. We create rich sands, which we put in canisters, and we chopper off the top of the big 5 dredges, which have helipads on the top of them. And then we take them back to El Bagre, where we further refine them. And then that doré, which runs about 92% gold and about 6% silver, will either go to Asahi in Salt Lake City, or it goes to Argo or Heraeus in Switzerland. The dredges are powered by hydroelectricity. When we're done in a containment area, when one of these containment areas, we remediate it, so we bring back all of that ground. We plant trees, so we have nurseries that we've taken samples of the trees. We replant, so you've either got farmland, you've got flood remediation zones, you've got rubber plantations, cocoa plantations, we've got beekeeping operations. So we understand as stakeholders working in operation, if you're not giving back to the community, if you're not making your operation sustainable, you will not be welcome. And we have been welcome for 51 years. Turning to Nicaragua, very, very different operation. 2 underground mines, smallish in nature, 3.5 to 4 gram a ton material in our proven and probable reserves. When you take a look at those reserves, those are for the 2 underground mines only. In 2025, we produced just over 22,000 ounces from those 2 small mines. We were actually stockpiling our material. We work with cooperatives who represent artisanal miners, and they bring us their rock. We sample that rock and we pay them between 40 and 45, sometimes as high as 50% of spot prices to buy the rock off them. Hence, our all-in sustaining costs are much higher in this operation because you've got a cost profile that is indexed to the price of gold. As the price of gold goes up, the cooperatives that we work with are getting a relatively stable percentage of the gold price. So hence the higher costs. That was about 80% of our production in 2025. What you will see us do in 2026 is we're constrained by the size and the amount of processing capacity we have in Nicaragua, so you're going to see us try and push on those constraints to get more material through the processing plant. We'll have more to say about that shortly because we will have our guidance out for 2026, which I'm hoping will include our CapEx, both growth CapEx and our sustaining CapEx, as well as our exploration plans. So really quickly, again, Nicaragua, we have a growth project here. It's got 572,000 ounces, about a 9-year mine life. We expect that we would pay about $200 million to build up a 2,000 ton a day processing plant. We are still working through some of the geometallurgical implications of this deposit. It's a zinc gold deposit, looks a bit different from the 2 mines we're currently exploiting. So we have to really understand what to do with this process flow sheet in order to extract, to maximize the recoveries on this. There is copper in this deposit. We just heard all about copper, love copper, but we want to make sure we do this one right. So we've got a little bit more work to do on this one. Again, Porvenir, in close proximity to the Porvenir deposit, we have 2 other deposits, Guillermina and Leticia, and so we want to understand those deposits well. Is 2,000 ton a day with this new processing plant the right size, or should it be a little bit bigger? And then we just acquired 80% of La Pepa in Chile that we didn't previously own. It contains about 2.2 million ounces of gold in the measured and indicated category. It's in an extraordinarily prolific postal code, so great area to develop mines. We know most of our measured and indicated resources are in the north bit of the deposit, so we want to understand what's going on in the southern part of the deposit. And I did say we didn't want any money, but what we do want is ideas about things to buy. So we're looking for 50 to 120,000 ounces, looking to spend 200 to 400 million to buy this to augment our production, because we've got a path or a map to go from the 221,000 ounces that we produced in 2025 to about 300,000 ounces. But we'd like to get a map for our investors on how we get to 500,000 ounces. I'm at booth 602. I would love to talk to anybody who would like to talk to me and has any more questions for me. Thank you very much for your attention.